We
Okay, mate,
are
we should be
officially
live.
live.
We should
We are
be live.
officially live, which means it's time for this. Not the ambulance in the background.
No, they've caught you.
There we go. Seamless. Absolutely seamless.
Absolutely useless, aren't you? Hello, everybody.
It's an old one, but it's a good one. It's what my missus says about me.
So what she says behind your back, mate.
As long as I don't hear it, it's fine. So how you doing, guys? Hope you had an amazing weekend. Happy Monday. I'm going to cut this song short a bit early today because we have got an action-packed show. We've got so much to fit in today. It is ridiculous. So let's start as we always start with the comments. If you're new to the show, welcome. It's great to have you with us. In case you haven't registered, just register with the StreamYard link so that we can see your name and a photo. Now, I've learnt my lesson from last week where Andy told me off. Yanis.
Yeah, there you go. Finally.
Hi, guys. He just does it now. Just to test me. He's going to stop commenting. That's the thing. That's what's going to happen. So every week we have a little, I finally got the seal of approval.
There you go. There you go. You see?
My life is content. Raj is in the house. Great to have you with us, Raj. But as usual, we do a little competition just because we're like quite competitive. We like to make games out of things. And this is the first comment of the show from Paul tuning in on YouTube. Good afternoon, chaps. Hope you both had a good weekend. Exclamation mark. He's getting more confident and more confident. First of all, it was just to get the first one in. And now he's starting to put like sentences and full stops and exclamation marks. Cocky. It's cocky, Paul. You're walking a thin line, my friend. There is some tough competition, but you have prevailed again. So thank you very much for commenting. And also, if you're tuning in with us, it's great to have you with us. Mr. Demi, how are you, my friend?
I'm doing very well, thanks, mate. I've already done my exercise for the morning, done my meditation. I got maybe 6 hours sleep, which is pretty good with kids.
Wow.
So I can't complain, mate.
Mate, you're looking like kind of layer cake crime lord today. Tanned skin, the slick hair, the golf shirt, looking very suave.
Thank you. That's very kind of you, Mr. Orlando.
I should have dressed up.
And it's nice that I'm wearing a t-shirt and you're wearing a jumper. I think that's very nice.
Yeah, it looks like there's some sunshine coming in for you as well. But like I said, let's not digress because we've got an action-packed show with lots to comment on. So we're going to jump straight in and talk all things funding part 2. So last week we were talking about the different options that you have as a trader for funding. You've got once you get to a certain level, you can go and chase after some private investors. And obviously the way the game is played there, and Andy's obviously done that side. And he also spoke about his days as a prop fund trader and having to hire a desk and all of that gubbins, and how the game has evolved now so that we can pretty much sit anywhere in the world in front of a laptop. And as long as we've got some skills that can hopefully pay the bills, then we can literally get a funded account. And some companies do up to 1 million. Maybe companies are doing a little bit more, which we can talk about over the next couple of days, a little bit more detail. But I want to start the show by going in as much as we can. So we spoke about that last week. This week, we're going to break down the evaluation process because it's quite daunting for quite a lot of people. Now, obviously, for you, you've traded multi-million-dollar accounts. For you, it's easy. But for us mere mortals that are new, or maybe we haven't even done any FX trading yet, but we want to kind of walk that path to that. I guess the main question is, how do you know when you're ready to start and go for the evaluation process?
Well, it's interesting that this is today's topic. You know, I like to just kind of, I like to, well, obviously as a trader, that's one side, and as a mentor, I like to see and learn what people are struggling with. And I learn a lot from people's questions. So sometimes somebody will ask a question and it tells me a lot about where they are in that journey. And, you know, so I kind of follow like various different groups. You know, I try to avoid all the spammy ones, but just where people are genuinely looking to learn. And obviously our group is the best group. So I obviously look at our group and see what kind of questions people are asking. And, you know, anyway, so I kind of looked at one group of somebody who was asking a question, who was basically doing the evaluation. Now, for those that don't know what we're talking about with evaluations, you can basically take a trading challenge and then essentially get funded. And it's something that we offer as well. And, you know, Gavin will share the information with you when we're ready, but we're really ramping that up to a really big scale. And when we're ready, we'll be sharing that with you very soon. So Gavin will be talking to you more about that. But without sidetracking, basically, like I was reading this question and I was like, people are giving this guy advice and it's completely the wrong advice. And I don't mean to be kind of like, you know, righteous or anything, but he basically posted a screenshot of his valuation. He had basically a max drawdown of $5,000. And he had posted a screenshot where he was down basically to his last $25 left. And his question was, guys, I've nearly failed my evaluation. What should I do to recover it? So he's asking now, how can he recover a $25 risk to then turn it around enough to make 5K? And everyone's given him and said, oh, you know, you should buy this because it's this, or you should buy gold because it's highly volatile. And really, this information is irrelevant to that guy. And I responded because sometimes I feel compelled that I should respond. And I basically said, well, look, based on your question, I don't think you should be really managing any live account whatsoever, because you're basically asking the group, what magic formula have you guys got for me that I can turn my $25 of risk left into $5,000 with a time limit? So the fact that he's asking that question tells me he's definitely not ready to be managing any money whatsoever. So, you know, that's kind of like, you know, so a lot of the time we kind of get fixated with like, oh, if only I can pass this evaluation, I'm going to get live money. But we have to be actually, you know, I think that the point is like, what are you doing it for? You know, we're doing it because we want to earn a regular income. Maybe you want to replace your job, right? So you're going to be relying on your trading skills to basically pay for your lifestyle, pay for your spouse, for your groceries, for your rent, right? Now, even if you somehow fluke and pass the evaluation, if you've done that, it doesn't matter how much money you've got to trade. If you don't know how to make money consistently, it's going to be irrelevant. So what I'm basically saying is like, you need to get to a level where you have consistency. Now, consistency basically means not that you make money every day, but that you have a systematic way of doing things. Like you have some good habits, you have some rules that are good rules that you can follow, and then you practice it where there's nothing at risk. That's why we always say, get good on a demo account first, follow the rules. And then once you start to see a steady equity curve, not like this, not like a yo-yo where you've made 5% and down 3% and up 6% and down 7%. Nobody wants to see that. Nobody wants to invest in that, right? You want to kind of have a nice, generally steady equity curve, some drawdown, of course, and you're following a set rule-based method, and you're confident and you've got the time and it fits your, and it's something I'm going to be speaking about more on Wednesday's presentation, actually. It fits your personality profile, because that's really important. You have to trade a way that fits your personality. It's very, very key, because we're not all built the same. We all have different traits. You know, some of us are introverts, extroverts. Some of us are good with risk. Some of us hate risk. Some of us are scared of risk. Some of us are overzealous with risk. You know, whatever it is, and we have, some of us are over emotional. Some of us are a bit not emotional enough. You know, we're all different people. So it's important that we develop something that will fit who you are as a person. So, like, let me give you guys an example. I can scalp the markets, right? Why? Because I am generally a fast-paced person, a fast-paced thinker. So now I don't do scalping so much anymore, because now I'm a family man. I've got kids and I've got different responsibilities, and I don't have the time that I had when I was younger. But going back, like, could I do it? Absolutely. I'm that way inclined. I'm the opposite of chilled when it comes to trading. Like, I could just sit there and trade all day, and I could just completely glue in on it. Whereas somebody else, that's the last thing they'd want to do. Like, it just doesn't fit their profile. They'd be like, my God, I want to do half an hour a day. I just want to do the, you know, clicks and buttons, and I just want to, you know, have a nice lifestyle. So the two individuals won't be able to trade the same way. So how are you going to get to that point? Well, you need to practice. You need to learn who you are. And then once you've kind of got that profile and you understand how you're going to make money, and then you prove it on a demo account, that's the point when you're ready. Now you take the evaluation. Before that point, even if you pass, the chances is that you won't actually get the outcome that you're looking for. So unfortunately, there's no quick fix. You know, there has to be some work. You know, we can give you tools, we can give you our guidance, but ultimately you still have to put the work in, because it's got to go in your head. It's got to go in your brain, exactly the profile of what you're doing. And then you once you know it, it's like a light bulb goes off, and you're like, wow, I know how to make money. I know how to do this now. And you feel confident you can do it. And that's how you're going to kind of be able to sort of, then you take advantage of the current process of getting funded, which wasn't available to me 20 years ago.
Awesome. Well, look, that is a very thorough kind of answer to our first question. You did mention a few things in there which may or may not have glossed over some people's heads. So we're going to kind of go through the key parts of the current evaluation system so that you know a bit more about what you're looking into. So the first thing that you mentioned there was drawdown. What is a drawdown for those that don't know, and what's some things to be aware of around that key component? Yeah,
so drawdown is essentially the amount of money that you can risk. So depending on the account size, for example, a drawdown of 10% is the maximum that most evaluations will allow you. So if you're going for an evaluation where you're looking to get funded, let's say $50,000, you can lose up to $5,000. Now, just to be kind of clear, you know, most evaluations are done on a demo account, but what my experience of that is that most people cannot, because of the psychology part of it, there is a difference between you trading on a demo account with no pressure and then you trading on a demo account being evaluated, because people are monitoring that. Traders, risk managers are monitoring your performance, and then they'll decide if they're going to fund you if you pass. So it's like, okay, you can lose a maximum of 10% and then 5% per day. Now, in my experience, a lot of people kind of fail on the 5% per day. They open too many positions. They don't know how to control risk. So the risk management side is the biggest factor. They go over the 5% and they fail. So that's been my experience of a lot of people, how they fail. And then by the end of the evaluation, the account has made money, but they failed because they broke the 5% rule. And some people don't understand it, and they're like, well, but I've made money, so what's the problem? Well, there is a problem, because the whole point is those parameters are set there, one, to see how disciplined you are, and two, because nobody wants to invest in high risk traders. We want to invest in traders that are basically really respecting risk. And actually, you know, if you think of myself like two profiles, one profile is who I am today as a trader, super disciplined, risk management, a real fundamental part of my trading, versus a young, hungry to make money Andy Demi, who had a lot of skills but didn't have control of that part. You know, that guy lost money, this guy is consistent. And that's what you've got to think about. Like, risk management sounds so boring. You know, why do we want to risk manage? And in some respects, I understand it, but I've learned the painful way that actually, if you don't control risk, it's just a matter of time. I don't know when, but you will blow up your account. You will lose money. And so it's up to you whether you go through that process and go through that painful experience, or whether you just kind of take my advice and just say, look, you have to risk manage. And it doesn't matter, you know, a lot of the time, why do people break their rules? Simply because they're trading a tiny account and it's just not interesting enough for them. If they're doing 1% or £500, it's just not interesting enough for them. So they don't, like, you know, they don't want to make £10 on a trade if they've spent 3 hours finding that trade. That's what it comes down to. So then they end up saying, well, let me just risk a bit more, or they don't think about risk, and that's how you end up blowing up your account. And you don't even kind of, I don't want to go down this area, because I know you've got a lot of things that you want to ask me, but
it's okay if it's valid, because if this is one of the key areas that people fall down on, then we should kind of expand on it. So any little Demi nugget bombs, feel free to pull the grenades tonight, mate.
Okay. Well, what I was going to say is then in that case is that most of the time we might tell ourselves that, okay, but it's only £500. Like, who cares? Like, I can just refund my account. So they take a punt. It didn't work out. They lost a few £100s, and if you're earning good money, you might not even care about that. But it's the cycle. It's the damage that you're doing to your subconscious, which you don't take into account, which is so important. What we do every day is a program. We are programmed. Everything we do is a program that has been learned. Okay, so over time we learn, and that's what we do. And we have beliefs that we have about certain things. So if your experience has been blowing up account, and that's your only experience, then that's what you believe as a trader. Whether you tell yourself consciously, actually, I'm a good trader, I'm a good trader, I'm a good trader, your internal beliefs are basically ones that, what's your experience? What's your experience been? I've basically funded an account and I've lost it all. And so you have that fear inside you when you're trading and you don't realize it. And you have that internal thing that actually, I'm a losing trader. And that will impact you when you say, when I get serious or whatever. So yeah, when I've got a bigger account, I'm going to be more serious. But the problem is now you've kind of built all these bad habits, and your belief system is that I'm a losing trader and I blow up my accounts and I don't control risk. So that's going to impact your results 100%. There's no way it won't impact your results. So don't think it's a free lunch, just like you could just punt a few £100, and if you get lucky, you get lucky. It will have an impact on the rest. So you have to approach it professionally from day one. If you recall, for those that know how I started with a £2,000 account, and at that point I was extremely disciplined, in the sense that I understood that I wasn't going to make a lot of money being risk managed with £2,000, but I knew that I would make a lot of money if I could take that formula, get more money, and then apply it with much bigger amounts of money. So I was extremely disciplined. I stuck to my rules. I averaged roughly £200 a month, right, of income. But that gave me the confidence and the boost that I needed to believe that actually I can do this. And that was a big stepping stone for me. So that's what I kind of encourage people to do, at least for a short while. But and then the great thing is that there is funding now, as we've been saying, where you can take that great inside knowledge, that know-how that you've built, and then say, right, now I can do this on 100 grand. And like, instead of doing £200 a month, I'm making 10 and maybe keeping 7 of it. And suddenly your life has changed. Like that becomes a serious income which will allow you to leave your job. So that's the price.
Very good knowledge being shared there. And I guess, like you're saying, you know, the analogy is, we don't learn how to drive in a Ferrari, do we? And it's like people saying, well, I'm going to learn to risk manage when I've got more money. You know, if you learn to drive in your Nissan Micra or your Volkswagen Golf, as was my case, you know, you learn the fundamentals there, don't you? Because you don't pass your test, and then you get into a faster car, and even then you're going to kind of skid off the road a couple of times, or, you know, kind of do a few, whatever it is, off the road and stuff like that, if you're not careful. And if you start driving a too fast a car too soon, you can kind of skid out of control. So it makes total sense. We've got loads more to cover, guys, but we're just checking in on some of the live comments. Nicholas on YouTube, great to have you with us. Thomas in the Philippines, can you pop over to Manila for a crop, Gavin? I'm not sure if you're a professional hairdresser, otherwise you will not be touching my hair. And Lucy says, that's Gav's boy band look. Thank you very much. I'm not sure if that's a compliment or not, but Brucey is forever cracking the jokes, so we'll take it as a laugh, that's for sure. So thanks a lot for your comment, mate. Now, going back to this whole funding and evaluation process. So we've spoke about drawdown. We've spoken about the daily limit. Now let's talk about another component of the evaluation process, which is a lot of people get confused about the days. So generally, the first phase, you have 10 trading days that you have to place a trade. Do you want to just break that down a little bit more of the requirements, and maybe there's a way to hack around that? I guess maybe in your experience, you could share one of the biggest mistakes that people make, and then a way in which they can look to turn that part of the evaluation process around.
Yeah, so the minimum 10 days is simply so that we've got enough data. So generally, I mean, well, I talk for ourselves, but also for like other prop firms, I assume. So you can't get one lucky trade that basically allows you to pass the evaluation. So you have to take 10 trades minimum, 10 days of trading minimum in the calendar month. So I think that's more than fair. And then on the second phase, you also have to take another further 10 days, I believe, from memory. Now, you know, the reason for that, as I said, is simply so that we can see enough data that you're being consistent and not just kind of taking one trade. You know, from a personal point of view, I mean, I know different firms offer different things. You know, when I invest in someone personally, I want to see consistency. I want to see, like I said before, I don't want to have somebody take one trade, make 10%, and then literally take little micro lots to just pass and game the system. I know that there might be companies that will fund you even doing that. The reality is, guys, though, if you're doing that, you might game the system, you might pass, and you might get a funded account. But as I said at the start of this show, the reality is that if that's what you're doing, you're not going to achieve the goal that you want anyway, and you're just kind of wasting your time. You know, you're not going to be able to make a consistent living from trading by doing that, because the next time you take a big punt, there's going to be a point where it doesn't work, and instead of making 10%, you lose 10%, and then you're out of the game, and you're going back to square one. And so you may as well actually trade, you know, correctly from the beginning, and you'll have a much better chance of succeeding and actually, achieving the goal that you're aiming for. So focus on the goal, focus on the prize, which is ultimately, what are you doing it for? What do you need to be making? How consistent are you in your trading? And if that becomes your focus, then you won't try and game the system and just, maybe take one lucky trade and then take little mini lot trades until you get to the 10 days and then pass the evaluation, because it's not going to really help you in the long run anyway.
So how should you, we're starting to get some data now, right? So you're not allowed to go over 10% drawdown. You're not allowed to go over 5% in a day. So now this is starting to give us some clues as to what strategies, or not even strategies, but just the risk management. This is still all really to do with risk management, right? So if you have to make 10 trades or one trade a day for 10 days over a calendar month of 20, then what are some ways that people can look to do that? Because obviously there's going to be people that are like, well, I just want to go for it. So yeah, what would be some advice really for that? Because obviously that means that you if you break that down, you've only got a certain amount that you can risk per trade, and you should only really be doing a certain number of trades over those times, right? There must be some ways that you can break this down to make it a bit more approachable and achievable.
Yeah, it's simple. Like you need to have an idea of how many setups, according to your plan, according to your personality profile, how many trades you will typically take per month. So that's important to know that. So that's why if you have done what I said at the beginning, which is like, taken the time to build a plan that fits your personality profile, you've practiced with it, you've gone on a demo account, and you've kept a track record of all the trades that you've been taking, you'll then be able to look back at 2-3 months of data, or at least a couple of months of data, where you can say, okay, well, look, on average, I take maybe 10 trades a month, or on average, I take 50 trades a month. So why is this relevant to your question? Well, simply put, if you're somebody who only takes 10 trades a month, then you will probably want to be risking more than, say, 0.5% per trade, right? Because if you only take 10 trades per month, then the minimum you should be risking is 1% per trade, minimum. Because I know we say, look, risk between 0.5 and 1%, but actually the most important thing is to understand is that you have your portfolio risk. So how much risk are you actually taking on per month? So if you have a win ratio of 50%, for example, then, and this is probably the easiest formula. Like, so if you know your win ratio, and you know basically how many trades you take on average per month, you can kind of calculate what you should be risking. So if you have a win ratio of 50%, then, and you normally take 10 trades per month on average, you could risk 2% per trade. So 2% per trade, that's probably about the right level. But if you want to kind of be a little bit conservative, then you can just go something like 1.5%. Whereas somebody else is maybe doing, say, 50 trades a month on average, so they're taking lots and lots of trades, then they're going to want to do a lot less than 1.5. So they'll be more like 0.5% per trade. So, you have to, and the only way you're going to know that is by knowing on average roughly how many trades you take, with not ideally, but actually really how many do you take? So given your work, given everything else going on in your life, and how many setups are available according to your rules, how many trades do you take? And then obviously the more data you have, the more accurate that's going to be.
And is there an optimum time to start the process? So ideally, I guess in your mind, and no one knows, right? It's all probability game, and you say this more than anyone, but I guess if you have one that you think is a particularly higher number of confluence points, for example, And maybe is there a time to wait for a setup like that before you start the evaluation, or do you just pick a date and then you're like, right, that's it. That's the date that I'm picking. That's what I'm going with.
I mean, both are okay. I guess, as we know, like that, you could do it that way. You could wait for, let's say, a better setup than others. But yeah, I mean, you could do that. There's definitely an argument to do that. But yeah, I don't really have a strong opinion on that, to be honest. I think realistically, yes, there will be some trades that have higher probability. But as we know, anything can happen with any trade, so it doesn't guarantee anything. But yeah, if you want to be strategic about it, I guess you can wait for a good setup. Personally, I don't think it's going to make such a big difference. I think if you're good enough, there's plenty of time. So I prefer just to say, right, I'm starting on Monday and that's it. I start on Monday and I just start looking for trades, rather than sort of waiting for that perfect trade, personally. But yeah, I can see why you would consider doing that.
And I guess it depends again. Now we're starting to get these layers. So there's all these different parts of the recipe, like knowing how many trades you take, what is your percentage win ratio, and then you can kind of have KPIs, right? You can start to have the data. You can start to have the latitude and longitude towards your destination, if you will. I guess that would work depending upon someone's personality type and if they were a less frequent trader to maybe wait, because if you only take 10 to 15 trades a month, how do you know you're going to get, I guess you're going to have to be pushing the boat out to hit that 10-day minimum benchmark if you're only taking 10 to 15 trades a month, because that's based on, you might have certain criteria. So again, it's worth giving all of these sorts of things some thought. So another area that, were you going to say something then, mate?
No, that's all.
Okay, cool. So that's another component that we've checked off the valuation process. Hopefully, guys, this is making sense to you and it's giving you some value in preparing you for if and when you get down that process. And maybe we've got people who are watching who have gone through the funding process and are funded traders. If you are, let us know. That would be great to hear from you. Also, if you're brand new to this, hopefully it's not too overwhelming. So again, if it's making sense to you and it's giving you some inspiration, then let us know in the comments section as well. So another area that a lot of these options of prop trading firms offer is that you can trade and you have to follow this. So you've got a certain drawdown max. You've got a certain daily drawdown. You have to trade a minimum of 10 trading days, but you're not allowed to hold positions. You're not allowed to stack. You're not allowed to hold positions over the weekend, should I say, and you're not allowed to hold positions overnight. How much does that impact a trader, and why would a company set that parameter and kind of clip the wings of a trader? Like, why would they do that? Why would they not let people to do that?
Well, I can't speak for other firms, but I know that's something that we won't put on the trader because I wouldn't want that put on me. So, we will allow people to stack trades. We will allow people to hold overnight and over weekends. Simply put, because I do. And I think it makes it challenging when you are being restricted as to how you normally would make money. So if you have to adjust your plan, and sometimes it can happen with investors. Now, if you're starting out, I guess you just kind of say, yeah, whatever your rules are, I'll change for you, right? Whereas when you kind of know your worth and you've done it for quite a long time, you're like, well, no, you change your rules for me. So because I'm a professional and this is how I make money. So I'm not gonna, if I change what you're asking me to do, essentially I can't deliver the same results that I've been delivering. So it's really, really important within reason that you work under the same conditions that you've used to basically prove that you are ready for the evaluation and ready to be funded. Now, if you are able to do it within that rule structure, and you've done that on your demo account and you've built your track record, then that's absolutely fine. But I just generally don't believe that restricting traders that way is going to help anybody. I understand why they do it, because it means that there's less risk. So overnight positions can have some risk. But, you know, I know for speaking for us, we have risk managers that take care of that. So that's not really an issue. The only real big risk is the weekend. I've got to admit, there is some risk there. So, you know, over the weekend, something could happen. You know, the FX markets are not open Saturday, Sunday officially, but they are still working in the background, so you can have a gap. But it's very, very, I mean, if there is some gap that's that costs us a bit of money, it's a risk that I'm willing to take on my own account, because the FX markets are stable. You're not going to have like a huge gap. It's not like stocks where something could be said about a particular stock and suddenly it's like, you know, massively gapped down from the closing price. You know, we're talking about huge, massive economies. You know, we're talking about trading the major currencies, right? Sterling, euro, dollar, Canadian dollar, you know, the Kiwi, Australian dollar, Swiss franc. Of course, the peg was the exception, but like with the dollar, with the Swiss peg, that was like that was an extreme black swan event. But in general, 99.9% of the time, it's not an issue, and that's why I don't believe it's something we should, you know, we should basically restrict traders with.
Awesome. So just checking in with the comments. This is the best FX. This is, if you're not a trader, then you are destined to become a trader. Amos Umlambo.
Ah, I like that.
That you are destined to become an FX trader. A 7-figure FX trader with that name. Thanks for having you with us. Huh?
And what's more Lambos?
More Lambos. Exactly, mate. Exactly that. And Michael Bruce. So best for traders not to hold positions anyway, especially on the weekends, or isn't that viable? I'm not sure I quite, do you understand? So best for the trader not to hold positions. Oh, okay, I see. So what's your take on that?
Yeah, I mean, look, you can have, I think that the point I'm trying to make is that it should be down to the trader. I think if you are a day trader, then it doesn't make sense to hold overnight. Because essentially a day trader should be kind of making their profits in the day and then closing up. What some day traders do is they leave a little position overnight in case it runs. You could do that. So you could scale out most of your profits, say 80% of them, and just leave it if you think the trend is going to continue. But in general, as a day trader, you close your positions and you don't hold over the weekend. If you're a swing trader, that's kind of like, you know, or a blend of two. So when you're swing trading, you have to hold overnight. I mean, you're never going to catch the swing otherwise. Like if you're always closing it early, you're never going to, like if a swing trader might be holding a position for a week, for example, and even longer sometimes. So, you know, you can't be closing your positions overnight because you're never going to hit your target. So there's no point being a swing trader if you're always closing every night. The weekend could be the exception if you really kind of feel uncomfortable with the gap. But as a swing trader, personally, I think, like, you know, you're generally giving it quite a bit of room. So, and if you're doing these kind of evaluations, by the way, you can't really just be a swing trader, not with the current format. And I know, like, Gavin and I have been talking about introducing other ways of doing it where it would be suitable for swing traders, which again, we will announce when we have something to announce. But I know for the current process, I think you have to do a combination of both if you like swing trading, because you just won't meet the minimum trading days within the time limit.
You read my mind, mate. So I was like, that was a great Great question, Brucey, for clarifying that. So thanks for asking it. You read my mind in the fact that is there kind of an optimum, talking about strategies or styles, is there kind of an optimum that this kind of evaluation process is suited for, or can you kind of shoehorn your style into it? So you've kind of just alluded to that. So if you want to kind of expand on that, that would be great.
Yeah, I mean, look, the ideal is that you have your target being hit within, say, 1 hour to 2 days. That's kind of really the time frame you should be looking at. So that will give you an idea of the kind of move you should be looking for. So generally speaking, if you're thinking, I like to hold things a little bit longer, I don't want to be somebody who's in and out all the time, then I'd be looking at, say, the hourly and 4 hour time frame for my target, which is typically going to be maximum, like, you know, well, it could be a little bit longer, but let's say 2-3 days should be your sort of maximum target being hit or stop being taken out. So, and then the scalpers could be in and out all the time. So if you're going for targets longer than that, it's not going to be really conducive to this kind of evaluation. And you have
when you say targets, you mean per trade, right? So whether you're going for a 1%, 2%, 4%, 5% per trade.
Yeah. Exactly. So if you kind of think about the waves that we look at, like if you're going to catch a C to D on an hourly or 4 hour time frame, you're looking at basically, you know, a day to 3 days tops. So
even on a 1 hour and a 4 hour?
A 4 hour, definitely, yeah. A C to D, wow. I mean, it's only got, I mean, what have we got? I can't do the maths right now in my head. How many? Six bars per day. So if you think about a C to D, it's going to need more than 6 bars, and even if they were all going up. So yeah, you're looking at 3 days really on a 4 hour. Like I said, maybe in a day to 2 on an hourly, and then if you're going for less than that, then it will be more like a day trade on a 30-minute or 15-minute chart.
That's another good question Brucey's got. He's on fire tonight. So if a trade was taken 1 day and held for 2 days, does that count as 2 trading days, or does it have to be a separate trade, closed and opened, or opened and closed on that day to count?
It has to be a new trade.
Or if you open one and hold it for 3 days, that counts as one, and then on that 3rd day you open another one, that then counts as the second one. Is that correct?
Yeah.
Cool.
Yeah. So it's you need to physically open up a new trade, basically.
Cool. So all of that's been done. Let's assume we've done all of that. We followed all those parameters. Then there is the final part of the first phase, which arguably is the hardest phase, to hit the 10% profit. Is there anything you want to talk about that, or is it as straightforward and simple as it seems? Not necessarily to do, but to understand it at least. Say you're going for a 50 grand account size, then obviously you've got to hit a 5 grand profit, right? It's that straightforward and cut and dry, or is there anything else to be aware of for that facet of the process?
Yeah, I think like if you've got a target to hit that is like, you know, essentially there for you to pass the evaluation, you should have some focus on that. I think in general, I say to people, don't be focused on that type. So when you're trading a live account, so if you're trading your own live account where you don't have these time pressures and these targets, I would have the target that you want to go for every month. Say, let's say it's 5% or 10% or whatever it is. But I wouldn't be actively, you know, thinking, God, I need to find a trade to get me to that 10% every month. I would just be taking high quality trades. I know how many trades I should be taking roughly based on my past and what risk I should be putting on each trade. And I know over time, the numbers will just work. So maybe I make 1% this month. Maybe I make a loss of 2% the next month. Maybe I make 20% one month. Maybe I make 5%, 10%. But the most important thing is that you're just focused on the process. You're taking good trades. You know how much you should be risking based on your numbers. And then it's just literally a numbers game. Now, when you've got the evaluation, you've got to hit 10%. Of course, you might want to be a bit more proactive during that time. You might want to spend a bit more time and look for more trades. big high quality trades, but maybe you'll spend a bit more time, because I'm sure you'll probably agree that you don't take every high quality trade that's available according to your plan, because you've got other stuff going on in your life and you don't need to necessarily. But maybe for the evaluation, you just make that extra time to hunt for more trades so that we can find better quality trades, more of them, to have a better chance of actually hitting our target. So I would just that's the only tweak I would make for that period. Once you pass, I would not do that. I would just literally be focused on just taking good quality setups, doing good risk management, and taking the amount of trades that you want to be taking that fits your lifestyle, because that's going to keep you in the game in the long run. Like what I'm telling you to do for a short period of time is not sustainable in the long run if it doesn't fit your life.
Awesome. I think we've pretty much ticked everything that's on the list. We kind of have taken a bit longer today in this segment of the show, but I really wanted to kind of dive deep and kind of get some little nuggets and knowledge bombs from Andy. If it's in front of you to kind of walk this path, maybe you've been learning a bit, but you're not sure on some of the things Andy's been saying, how to combine swing trading with shorter term trades and work out all your ratios and everything else that's including in this. We are doing a masterclass. It's the first one in a while for FX. We've wanted to take our time to really kind of keep everything that's been working, but actually have it with a specified goal. And we've got some exciting announcements that we're going to make the first one to the public on Wednesday night. We've got some more, like Andy said, that it's not quite signed and sealed and delivered like Stevie Wonder says. So there's some things that we still can't say yet as much as we want to, but we are going to be able to unveil the first round of that. So if you're interested, register for the masterclass this Wednesday night at 8 p.m. Now, there is something else going on Wednesday at 8 p.m., but it's up to you whether you want to do that or whether you're prepared for this process to sacrifice a bit of time.
Obviously, we booked it on purpose at that time just to see who the serious people are.
I'd love to say that we could, because then we'd know which trades to take. Well, I'd know which trades to take and which ones not to. You already do. But yeah, we are referring to the Euro semi-finals. I think there's a little game, England versus Denmark or something. I've heard. I'm not sure if many people know about it. But for those guys that want to do the trading, Raj, and I know she actually bet on England. She won some money last week. She's going to do both. I'm not sure how you're going to do that unless you have a time travel machine, but that will be very interesting to see how you're going to do that. And when you say it's coming home, firstly, Facebook user, identify yourself. Secondly, when you say it's coming home, you mean the funded account is coming home to your bank account, right? 100 grand is coming home. Screw the football.
I like that. I like that commitment from Facebook user.
Yeah, it is.
Obviously, he's not referencing the football. He's just talking about money. No,
it might not be a he. Don't generalize. But in all fairness, we'd love to have you on Wednesday, especially if you're brand new and you don't know anything about this. There is a structure, there is a process that you can follow, and that can start on Wednesday evening from 8 p.m. It's a private event, so we won't be posting the replay in the group. The only way you'll get the replay is if you register for the webinar. So even if you're not sure yet, you might watch the footy, you might commit to FX. Even if you're not sure if you're going to make it, register for the webinar. That's the only way that you're going to get the replay. Just to clarify, because so many people hitting us up saying, can we have the replay? Can we have the replay? No, we can't do that. So it's only for people that register for the masterclass. 8 p.m. BST. That's 8 p.m. British summertime. That's 5 a.m. for me. So, yeah.
Is it summertime or standard time?
British Standard Time.
Is it standard or summer? You said summer.
I say British summertime because it is, right? Who cares what it's meant to be? BST, British summertime. You know what I mean. You know what I mean. So with that being said, let's jump into, we've overran slightly this week, but like I said, I wanted to give as much value as possible. Even if you want to try and do it yourselves first, we want to try and give you that information. We share as much open information as we can in the group. We've just come over the 4,000 member group, members in the group. So thank you very much for that as well. We've got big plans to be growing the group. However, it's time for the trade setup of the week with Mr. Andy Demi. And as usual, first of all, we're going to give you the workings inside the mind of a professional trader. So what is the new setup that you're going to look at this week, and what sort of trading ideas would you have from this? Now, it's not an accident that we're giving you that, because obviously from the news, then you start to have an idea of what currency pairs may or may not be giving you more clues and opportunities, especially if you're looking to take 10 trades in a 20-day period. So with that being said, Mr. Demi, take it away, please.
Yep, sure, mate. I will just I think it's worth mentioning, guys, that, you know, on Friday we did have FOMC, non-farm payrolls, and if you didn't see the outcome, it was pretty bullish for the dollar. So the employment numbers were forecast to be 725,000 from a previous 583, but we actually came in stronger than that at 850,000. So that in itself was bullish for the dollar. But the other thing that you have to look at as well is the average hourly earnings, and we also have the unemployment rate. So if you look at the average hourly earnings, we had a previous of 0.4%. The forecast was 0.3. It came in at 0.3. So in that sense, overall, combining these two, that was bullish for the dollar, because that was what was priced in. So generally, what's priced in is the forecast. Of course, it is factored in what happened before, but it came in as exactly as forecast. But the actual numbers have improved, which is bullish for the US economy as in itself. Obviously, that's not comparing it to other economies, which is what makes FX pairs move up and down. And then the unemployment numbers were a little bit higher for the dollar. So that, again, you can see there is a negative. So kind of mixed. I mean, generally bullish, but yeah, it could have been better, basically. So forecast was 5.6. Unemployment came in at 5.9. Today we've got Independence Day in America, so markets probably going to be quiet. US traders will be off. Generally, Mondays are fairly quiet anyway. We've got the OPEC meetings going on all day. There's some disagreements going on at the moment with that, so that could, you know, there's potential there for a spike in the dollar. In crude. Until that's kind of, that's to do with sort of controlling supply. So that's kind of ongoing. So if you're trading crude, you definitely want to kind of keep an eye out on what the outcome is of that. Basically, the UAE is going against other members of the group. What else have we got this week? Well, we've got the RBA statement coming out from Australia. That's going to be overnight. So if you guys entered a position today in the Australian dollar, you will have overnight risk. As the markets are fairly quiet, you're not going to get a lot of movement today, and you have that overnight risk. So I would be kind of cautious on this. You can definitely look for potential swing trades in the Aussie dollar. So any spikes might be a good way to get into a swing trade. And yeah, so we'll have the rate statement, and then we have Governor Lowe speaking a little bit later, a couple of hours later. ISM services, not for me, it's seen as high impact, but in my opinion, it won't be a big impact there. We've got the minutes, Governor Lowe speaking again. What else have we got? Thursday's nothing going on. And then on Friday, we have the BOE, Governor Bailey speaking, and we have the employment numbers from Canada as well. I think these times are wrong, by the way. I think these times are wrong because but you guys can check on the calendar yourself. So yeah, that doesn't look right. So let me refresh this. Hold on. Yeah, so one little thing you should definitely check, guys, is the time up here. So sometimes it defaults, which is strange actually, because it is coming up as London. But there we go. It's correct now. It just needed refreshing basically. So so it should be fine now. Oh no, hold on. You know what? Hold on one second. Let's refresh this like this.
Well, at least we know if your trading career comes crashing down, you won't be working in IT support, will you?
No, exactly. There it is. Yeah. So now you got the right time. So just make sure you check that, guys, because sometimes you can kind of miss that, and then you're like, oh, well, I didn't expect that. You know, I mean, the obvious thing was that Governor Bailey is not going to be speaking at 6 o'clock in the morning. So you know, so sometimes you just because it's in the UK, so just double check. But yeah, that's the correct time now.
Awesome. So with that being said, and with all that news, what kind of currencies are bubbling away and percolating away as to what you would look at based on this outlook?
Well, I think there's a lot going on. If you want movement, I think there's a lot going on, obviously in Australia, with the rate statement being important. But I think also, I know just offhand, which is not here. I know we have Boris Johnson speaking today about the about the 19th of July and the easing of the COVID restrictions and so on. So you have these kind of indirect things that could have an impact as well. So yes, I mean, the calendar tells us a lot. So the calendar right now is telling me, the Australian dollar is going to have a volatility. Obviously, we've got the CAD, but I think GBP in general will also have volatility with everything going on. And also there's like a couple of times there's some speeches throughout the week. So yeah, so sterling, Oz would be the obvious ones where we could get some volatility. But having said that, I think you can still look across the board to see what other across the major currency pairs. But that's probably where the volatility will be in the week. Do you want me to look at? Because I was just planning to just follow up on the euro today, especially to be quite short on time, and I was just going to kind of share something with people that can give them some help.
Okay, that's cool. So from the breakdown of the news, you would be saying look at sterling Oz this week, right?
No, I wouldn't actually. I wouldn't look at sterling Oz. I mean, you can, but I generally don't like to have two basically FX pairs. Well, I basically don't want to match two that have basically got a lot of news coming out, because you could have one go up, one go down, and it could create a lot of spikes, and there's a lot more uncertainty with that. So I would rather have the Aussie against the dollar, for example, or the Aussie against the euro, because then the uncertainties with the Aussie. So yeah. Otherwise, like, you could have one piece of good news, great, you're in good profits. One piece of bad news, damn, you're back up, scratching, you're getting stopped out.
Okay, so just to clarify, that's the currency pairs that we'd be looking at based off the news. And now we're going to review the currency pair that we were looking at from last week, right?
Yeah, exactly. So I know, and I want to do this because I just want to kind of be clear that, because I know some people will follow what I'm saying, and you can profit from what I'm saying, but it's really important that you have context, and there's a point where setup is invalidated that you have to kind of take into account. So for those that don't remember what we were looking at last week, well, in general, the first thing is that over the last few weeks we've been saying that this market is likely to fall. That's fallen, which is great. And now we're kind of in a position here where we've dropped quite fast. And I was kind of looking at and thinking, well, there's definitely a possibility that the market could, do this kind of thing where we've got this market angle. There's a lot of support here that we could actually go back and bounce back to 120. So that's kind of like what I was looking at. Now, when you go over to the 4-hour time frame and you look at the market angle that we had here in place, we were looking at basically initially when it was up here, initially we were looking at around 118.77. So when we did this, we were looking for basically a move down to there and then a potential move up like that. But that didn't quite happen, and then it eventually happened, and it basically, if you kept the order in, then you would have been getting filled here. Now, without kind of going into too much detail, that kind of isn't a valid setup anymore. So if you had this line drawn incorrectly, you would have known that actually, do you know what? We've broken the market angle now. It doesn't actually make sense. And look what happened. It bounced at 118.77, didn't it? Perfectly, because it was a key level. Look, you could see we identified that. But this time it bounced into the market angle and went lower, right? So the level reacted, but because we'd broken this, the reason why we got in was this. We know this is the area where buyers are in control. As soon as that's broken, what your conclusion is right now is that the buyers are no longer in control. So then it's now bounced into that line and then gone lower. So I just kind of wanted to stress that point. Now, where are we?
Mate, before you go any further, just to cut in there, you did an awesome video at the tail end of last week. I think it was Thursday or Friday in the free crypto and FX traders group. The video was on the strength of the US dollar, right? So because the US dollar is going up, that would be a confluence point to say, okay, well, it's broken this market angle line, but can that market angle line now act as resistance instead of support? You would be looking at that based on the knowledge that the US dollar is stronger than the euro right now. You would be looking at that as being potentially a higher probability play. Is that something that you could have combined?
Yeah, exactly. So if you kind of watch that video and you say, okay, well, look, the dollar could strengthen here because we've reached the key point. And then you'd sort of seen this and we'd broken this market angle line, we were pushing back into it, then absolutely that would have made sense. And the market has dropped. So yes, I mean, look, you can do it without that. That's just like a further confluence that shows like, okay, there could be some dollar strength. So that's independent of the euro. Just dollar strength is dollar strength, but you really don't want to be potentially trading against, because like if you're buying the euro dollar and the dollar is potentially going to be strong, then you're going to need the euro to be stronger than the strong dollar, if that makes sense at all.
Yeah, exactly that.
Yeah,
and then it's just about looking for an entry point, right? Based on that news, because you're just going with the probabilities and the confluences. You're just stacking these things up.
Exactly. And look, if you were sort of looking at this, then it definitely would be great for day trading to say, okay, I could try and take some short down for day trading. Now, the other kind of like caveat to all of this is that for those that kind of understand how we trade, you'll also know that we've kind of approached an area where the buyers are interested. This is called our fade zone. And basically that kind of adds another layer of uncertainty. So what that basically means is that one of the reasons we were looking at here is because we know the probability is that the market will have a bounce somewhere here. And as soon as that broke, then that's kind of telling us, well, it may not happen right now. Now, how could this have changed? Let me just share that with you. If you broke this line, here you shouldn't buy because you've broken it. But if you kind of, because sometimes what happens, guys, is that we could have ended up with a double bottom. If this had happened and it came back in, I would be saying to you guys, well, look to buy it there and target back up there. But then you've got that confirmation that you're actually back above. You've had a double bottom. In this case, it didn't do that, but just kind of like, that's kind of, so that's what you should, that's the difference. It's like saying, okay, well, that's broken, so that doesn't make any sense to buy it here anymore. However, if we do kind of go back in, I'll look to buy it back on this line, nice level there, and I'll look to target maybe back up there, right? So you have to always be planned, adapting. It's not a case of like, oh, we said this and that's valid. It gets invalidated immediately when it So one of the things I always say is like, if the reason why you got into the trade or the reason why you were looking to get into the trade no longer applies, the trade is invalid and you don't take the trade. So it's like you have to be dynamic when you're trading. You have to have multiple plans of how you're going to make money. And that's obviously what we teach and how to be prepared for all of that. So going back to where we are right now, guys, there's a couple of things I want to share with you. One, we are in that zone. We are in that zone where the market could have a rally, right? Just like we were before. Now, you could also take this line and use that as a guide, right? So right now that this could definitely rally and go back towards, these areas up here for sure. But again, if we break through this line, that is no longer valid, right? And then we'll be looking for exactly the same thing as here, where it pulls back. And then again, for day traders, you could take some day trades down. Now, one little tool that I want to share with you here is the MACD. Now, the MACD indicator, there's a couple of things here. One is divergence. Right now, the market is showing us some divergence. So in other words, the price has made a lower low, the MACD has made a higher low, and it's crossed up, right? So there's some bullish price action. However, having said that, one thing I want to show you here is what happens when the market is below the zero line. So the first time we were below the zero line was basically here. And since then, the MACD has stayed below the zero line. Look at where the euro has gone. Are we still below the zero line? Yes. So for full confirmation, you want to see the MACD go above the zero line, and then you'll probably see some good bullish price action. You can kind of see over here, MACD above the zero, market rallies, MACD above the zero, market rallies. Right now, we are still below the zero line. If you're buying here, you're buying early, you've got a good potential reward to risk. If you want confirmation, let the market push up, let the MACD go past the zero line, then get the pullback, and then take the trade. And that's it. I think I've covered a lot in a very short period of time.
You have done very well, my friend. Very well. So that is everything in today's show, guys. Sorry we have overrun slightly, but like I said, we wanted to get as much in as we could. Facebook user, identify yourself. Normally you'd be in trouble, but you've registered for the webinar over the football. You have shown that you are using the FX Force instead of the football. So we won't mention any of the scores or the result, because I know that you'll probably be replaying it and watching it after the masterclass, aren't you, mate?
Who, me?
Yeah.
No, I won't be.
No?
To be honest. No, I can't be bothered, to be honest.
Fair enough. Cool. So yeah.
To be honest, I'm not going to bother to do that now.
And guys, just to let you know, I've posted the link for the webinar, so feel free. The gates are open now. The doors are open now. If you want to get the masterclass recorded, Yanis is going to be at work. So that means that you're going to have to register, and then you'll get the replay.
We need proof. We need proof he's at work. Yanis, if you're watching the football, my friend.
And a selfie at Wembley Stadium does not count unless you're one of the stewards. And then,
yeah.
And then we'll accept it. But on a serious note, like we said, we've covered a lot in just over 60 minutes. If it gets you excited that we've broken down the whole evaluation process, there is the opportunity to get funded with minimum 12,500. Some people 25,000, some people 50,000, some people even go up to 100,000 just to start once you've passed the evaluation process. But you can go up to, most people in the market is $1 million that you can get funded. Now, as we've been saying before, maybe there's 2 million reasons why you might want to stick around over the next few days and weeks that we will be able to share hopefully very soon as to why you might want to stick around. But even $1 million as a funded trader, just think about that. That's pretty awesome. And obviously, once you pass that, then comes the whole fun of the mindset stuff, right? Because you probably remember when you made that big jump up to the next level. And that's why it's probably smart to start somewhere that's just a little bit out of your comfort zone. And then obviously, once you hit your profit targets, then you can double up to the next size funded account. Would you say that's probably about right? Because I've never done this. It's something I've got as a goal for myself this year at some point. You're the one who's actually done this, Andy. So I guess, should we leave with a little bit of a golden nugget of wisdom just on that topic before we bounce?
I don't know, mate. I've already switched off.
That's why we only go for 60 minutes.
Can I give you in 1 hour?
That is why we only go for 60 minutes.
Exactly.
So
my brain shuts down, guys. Like, I thought Gavin's saying, yeah, good luck, guys. See you soon.
So look, and I was so engrossed in your breakdown that I haven't queued up the song, but it's fine.
Oh, that's what it is. You just need me to talk.
It's a filler, mate. Come on, you know how this works. You'll get the answer on Wednesday. Register for the webinar.
Exactly. Yes.
How to become an FX funded trader. And we will see you tomorrow talking about all things cryptos. So the FX Masterclass is this Wednesday night. Crypto Like a Pro live is tomorrow from midday BST. That's British Standard Summertime.
What? That's BSST. BS squared T.
It is what it is. It's gone 10 p.m. here. I'm also switching off. So guys, thank you for joining us live. If you're watching the replay, hope that's got you excited. We will see you either tomorrow night or Wednesday night. We're becoming as popular as EastEnders, mate.
I know. Take care, guys.
Let's go.